Good day, ladies and gentlemen. So one of my subscribers made a request that I make a video on how to use the Fibonacci retracement strategy. Okay, so that's the reason why I'm making this video. If you would like me to talk about anything in the forex world, you can definitely make the request in my comment section. I'll do my best to actually do justice to that. Okay, so when it comes to the Fibonacci retracement strategy, the very first thing I want to do is I want to take you to my own settings so you can do a screenshot and kind of copy my settings so the settings I use when it comes to this Fibonacci retracement. Let me just draw it out roughly, then I'll click on the line in order to edit it so you can see the settings. So these are my settings. You can do a screenshot. Let me go to the levels at the bottom. Okay, levels. All right, so these are the levels I use. You can see 0%, 23.6%, 38.2%, 50, 61.8, 100%, minus 38.2, minus 23.6, and 78.6. You can just do a screenshot and come and fill up your own just like this. So let's go back. Okay, so let me give you the idea behind the Fibonacci retracement strategy. It's more like we already know that when price is trending, let's say it's trending in the upward direction, you are going to have an impulsive move, then you have a retracement, an impulsive move again, a retracement, an impulsive move, a retracement, just like that until it finally fails. Maybe there's a break of structure. Instead of creating an higher high, you have it breaking an higher low. Okay, hope that makes sense. Also, when price is trending downwards, what do you have? You have an impulsive move down, then you have a retracement, impulsive move, continuation, retracement, impulsive move, continuation, impulsive move. Okay, retracements, just like that. Okay, until it finally fails, whereby instead of creating a lower low, it just goes up and breaks the structure. Okay, so what we are trying to do is we are trying to catch these retracements before it finally bounces back. So we are trying to enter at this point before it moves up. It retraces again. We're trying to enter at this level before it moves up again. Okay, hope that makes sense. That's why it's called the Fibonacci retracement strategy. So let me draw out the Fibonacci. Let me draw it out so I can talk about the levels. Sorry. Wait a minute, let me show you what I clicked on. For those that don't know what I clicked on, let me show you what I clicked on. So when this radial menu is up like this, this is where you're going to find the Fibonacci, these objects. Okay, so that's what I clicked on in order to get the Fibonacci. Okay, and you can see it up here. This is the icon. Okay, so that's where you're going to find the icon. In case it's not there, it means you have not added it. So you click on plus. I've done a video explaining how to get it, but let me just quickly talk about it. Once you click on plus, you scroll down until you get to this Fibonacci point. Then you can see Fibonacci retracements right there. Okay, then you click on it. It's going to be added. You can then do your settings. So let's go. All right, so these are my settings. You can see I have 0%. So what you really need is this level. In order to draw the Fibonacci out like this, what you really need is this 0% level. You can see 0.0 and this 100% level. Okay, so you are drawing it on the impulsive move. Okay, you're drawing it on the impulsive move, meaning if it's an uptrend you're trying to catch, that impulsive move that moves up like this, and you notice that it's retracing, these levels are where you're going to draw your 100 and your 0. If it is an uptrend you're trying to catch, the 100 is going to be down here. That means you have to start the drawing from the bottom of the impulsive move, then you draw it upwards, while the 0 will be up here. Okay, so the 100 will be down, the 0 will be up. Whereas if it's a down move you are trying to catch, you see an impulsive move like this, then it starts retracing. This part will have your this part is going to have your 0, while this part is going to have your 100. Okay, so the top part will have the 100, while the bottom part will have the 0, meaning if it's a downtrend you are trying to catch, you are going to start drawing the Fibonacci from the top to the bottom. Okay, while if it's an uptrend, you start from the bottom to the top. So anywhere you start from is where you are going to have 100. Okay, so that's why you have 100 at the top, then 0 at the bottom for downtrend, meaning you started at the top, then you dragged it to the bottom. While if it's an uptrend, you start at the bottom, then you drag to the top. That's why the bottom will have the 100 and the top will have 0. And you can see this line, this diagonal is showing you what you have, the extent you actually drew your stuff to. This is your 0 and this is your 100. Okay, an example is going to make it clearer, so don't get it mixed up. So let me look for an impulsive move. It's a retracement. Okay, so this is an impulsive move here. You see upwards movements, then you have this retracements here, upwards movements, retracements, upwards movements. Good. So I'll use the first upwards movement. Let me make it a little bit bigger. Okay, so this upwards movement, I'm going to draw my Fibonacci on it. I'll start at the bottom, so you put a dot at the bottom like this. You can see it's at the bottom. Then you click on the dot and extend it towards the right. Extend it towards the right like this, then up. Let me shift it a bit. Good. So you see that what do we have? We have our 100 right here at the bottom of that move. Then we have our 0 right here at the top of the move. Okay, do you see that before the retracement started coming up? So what you're trying to do is you are trying to look at these levels to see which level price is going to bounce off of. So these levels are levels that price usually bounce off from. The first level is the 23.6, this level. The second level is the 38.2. The third level is the 50%. The fourth level is the 61.8. Then you have this level, was it 78.6, and then you have the last level, which is the 100%. Okay, so statistically the 50% and the 61.8% are known to actually bounce price the most. That's why the zone between them is called the golden zone. Okay, so the zone between them, this zone right here, is called the golden zone, between the 50% and the 61.8. as you can see, that's where price bounced off of in this example. And what you have, price moved up and it's our take profits. Most times I take my first profits at 0%, because sometimes it can get to 0 and reverse back after touching a 0. If I have 2 trades on, I'll take my second take profits at minus 23.6. Definitely I would have moved my stop loss into some profits. Hope you get that idea. All right, so basically that's just what the Fibonacci retracement strategy is all about. You draw the Fibonacci, you know, on the impulsive move. Once you see that retracement has started coming in, you quickly draw the Fibonacci on the impulsive move. Then you start checking the levels to see which level is going to bounce price. Okay, knowing fully well that statistically the 50% and the 61.8% usually bounce price the most. Okay, sometimes it gets to the, what's it called, it gets to the 78%. Okay, sometimes it gets there, sometimes it gets to 100, but most times when it gets to 100, it's showing you that the trend is no longer strong, because for a strong trend it's not supposed to go beyond 61.8 and probably 73. Okay, sorry, probably 78. It's not supposed to go beyond that if the trend is strong. In fact, when the trend is very, very strong, it might just retrace to this what's it called, it might retrace to 23.6, moves up, retrace just to 23.6, then keep moving. Okay, that's when the trend is very, very strong. So let me take this out and give you another example. Let me delete this. So another example is this one you have right here. You can see this impulsive move. So since it's an uptrend I'm trying to catch, the impulsive move is upward, so I'm trying to catch an uptrend. I'll draw from the bottom to the top. So where's the bottom? Where the start of the move? Bottom right here. I've put my dot right there by clicking on it. I'll click back on that dot, then drag upwards and towards the right. Upwards and towards the right. Moving up, making sure that where I have my 0% will be at the top of that move. Good. You can see where I have my 0%. My 0 is right here, and if you check the line, it's at the top of the move. Okay. My 100% is right here at the bottom of the move. Definitely I would have seen this red candle coming in for me to quickly draw the the Fibonacci, because for that red candle to come in, it means retracement has started. So I want to now know where the retracement will get to, which of these levels will it bounce off of. And what do we have? It came down and bounced off the 61.8 level. As you can see, you see the 61.8 level right here, and this is your 50% level right here. That's where it bounced off of, and it hits our first TP, which is at 0%. First TP was, reached at 0%. Second TP at 23, negative 23.6. This level also hit. Is that lovely? If you are getting any value, please subscribe to this channel. That's the only way you encourage me to keep giving you all these strategies for free. Let me give you one of my secrets though. One of my secrets is when I'm trading Fibonacci, I like seeing a candle in my direction before entering. So even though it has gotten to 68%, I don't just enter the trade. I like seeing a candle in my direction before entering, because if you just enter right here, it can actually form another red candle moving downwards. Okay, it can form under red candle, then form under red candle, and just reverse completely, and hit your stop loss. So I like seeing at least a candle in my direction before entering. In fact, there's a way I use Fibonacci strategy specially. I'm going to explain that in a different video, but I won't be talking about Fibonacci alone. It's like a combination of Fibonacci and something else. Okay, combination of Fibonacci and daily bias. I'll talk about that strategy in a different video, but you can also use Fibonacci like this. A lot of great traders use it like this. I use it like this also, but I also have another system where I apply my Fibonacci knowledge. Okay, so let me see if I can get an example for a downtrend. Let me delete this. So the downside, let me tell you the downside of this Fibonacci strategy. The downside is there are a lot of levels, so you can't be 100% certain which level will bounce price. Okay, there are many levels, as you can see. You can't be certain. It can get to 28 and bounce from there and start moving up, while you are still waiting for it to get to 50% or 68%. So definitely you have missed out on that trade. You understand? And it can get to 61%, 68%, and you'll be like, wow, it has gotten to the level you want it to get to. But lo and behold, it goes past it, goes to 78, goes past 78, goes to 100%, goes past 100, and just keep going down. And guess what? Your stop loss is hit. So there's no strategy that's 100%, but it's actually a good strategy, but it's not 100%. Okay, its accuracy is around 75 to 80% actually, in my experience. Okay, so let me see if I have an example I can give for a downtrend. Okay, so I can use this is like an impulsive move. I'll take all of this as a single move. Okay, I can take all of that as a single move. So I'll place my Fibonacci from here. You can see I drew it from the top this time around, from the top downwards. And from the top downwards, what do you have? I have my 100 right here, okay, depicting the top of that move. Then I have my 0 right here, showing us where the impulsive move stopped and started retracing. Okay, so what do we have? We have a retracement up to the 78.6% before price then moved downwards, hitting our first TP. Let me extend this Fibonacci a bit. Okay, all right, so what do we have? Our TP, first TP was hit at 0% right here. You can see 0% there. Second TP at minus 23.6. It even hit the minus 38.2% take profit. So all of these values, 0%, minus 23%, minus 38%, all these are take profit positions where price can possibly get to. But the safest place is 0%. It can get to 0 and reverse. Okay, so that's that about that. So I hope you now have an idea of how to use this particular strategy. Okay, so let me draw. Okay, I've already drawn for this one. Let me see if I can give you one more example. Okay, let me use this as an example also. I love EuroJPY with Fibonacci strategy. You find a lot of entries. I don't know if you have noticed. That's why I use this particular this particular pair to explain this strategy. I noticed it moves well with Fibonacci retracements. Okay, when I trade Fibonacci retracements alone without combining it with another strategy, I like trading EuroJPY. Okay, so that's why I'm using it as an example for you. All right, just so you know. All right, so what do we have here? This is my impulsive move upwards. So I decided to draw the Fibonacci. You can see I have my 0% right here showing you the top of that move, and 100% showing you the bottom part of that move. So we have our retracement up to the 78.6%. It's retraced up to 78.6%. Like I told you, I like seeing a candle in my direction. If it even gives me a candlestick pattern, I would love it. As you can see, this is an hammer showing you the price is about to reverse. So this would have been a beautiful trade for me to enter. And what do we have? Price moved in the upward direction. How many take profits did he eat? He got my 0, which I said is the safest take profits in the game of Fibonacci retracement. That's safest take profits, because price could reverse after hitting that 0%. But there's a possibility of you having higher profits. You can see it hits this particular one, negative 23%. It also hits the negative 38.2. So all take profits were hit, and price even moved higher. Okay, price even moved higher. All right, so this is a very nice strategy. All right, if you got any value, please subscribe.